Hey guys, how's it going? Good morning. Today we got CPI, so some pretty exciting things are going to be happening today. Every time there's going to be CPI in the markets, things go crazy, but right now we can definitely be using the CPI data for our benefit as all of these tariffs are further progressing. And main discussion here is really why would I be expecting further stronger USD? That being said, the USD itself being stronger and subsequently, of course, the XXX USD pairs like Euro USD, GBP USD, and those sort of pairs moving lower, of course, and further weakening is really coming down to a lot of different fundamental factors right now. And all of them just seem to be aligning with the fact that the USD index should be increasing. So let's just speak of this in detail and let me share some opinions in a couple minutes here before we head into the New York session. Right, so we are here on the economic calendar, one of the most important parts in trading, in my opinion. Really, you gotta be a data-driven trader to properly make decisions here. And as far as we look at some numbers here, this is going to be quite significant for decisions and also how potentially the Fed will be moving forward with the inflation. So let's just clarify a few things here before speaking of the inflation data. So what we have seen yesterday and also what we have started seeing in the past week, there has been a lot of positivity with the USD being stronger based on US and China having some negotiations on the tariffs. So that has been quite constructive, so to say, and it has been definitely making the USD stronger. So that has been something we have seen in the last couple of days. And as I mentioned, that was really the main reason why everything has been moving stronger, simply because there has been a much more positive negotiation going on in the favor of making the USD stronger of the China and US tariff deal. Because of course, recently they of course did announce the tariffs and it wasn't actually making the US dollar stronger immediately. Like it wasn't an immediate effect. And that was kind of expected because as soon as they have announced the tariffs, which is basically more tax on any sort of imports going into US, it had just kind of weakened the USD. And that's, of course, if you just go back to a chart and also take a look at how things kind of been progressing before that. So, kind of before in the month of April here, of course, bunch of fear has been going on. The USD was weakening, of course, because no one was actually really understanding how this is going to be affecting the market. And also, like I mentioned, because it has been a new government policy imposing tax on the imports going into US, it has just made the USD weaker, of course, because it was costing more to buy something. So obviously it was driving a bit more on the inflation side. But as they mentioned, of course, and it was expected, like long term, they obviously did mention these tariffs are indeed going to be making the US economy stronger. So despite what we had recently of the market just moving a bit lower because of some short-term inflation caused because of the tariffs, that is right now a bit behind our back. This week, and as I mentioned, since yesterday, ever since more positivity was coming out and actually it was confirmed that the deal that they were looking to get between China and the US was indeed positive, was already driving the US dollar on the stronger side. So again, we are more on the rising side on the USD. And in the next further coming weeks and months, we can just further expect that USD to be further increasing in a trend because at this point, there's really no logical reason for this to be weakening, because of course the deal has been pretty much negotiated. They have gotten what they're looking for. So of course, with that logic, it is more on the strongest side right now, being positive for the USD. So that is of course not the number one reason why I'm expecting the stronger USD. And this is of course something I did already mention yesterday. However, right now that we have the CPI event, it is going to be very important to also consider this, because at the same time, what we have here is they are basically having some higher numbers with the core CPI. Most typically, CPI is quite an interesting figure in the market, very much misunderstood a lot of times, because what the CPI does, it's basically an inflation indicator. If it would be a higher number, it is leading to higher inflation. If it's a lower number, it means lower inflation. So it's kind of a misunderstood concept, and a kind of a sometimes it can be misunderstood, because it really depends on how Powell would be speaking of it. So based on how they are having a narrative around the inflation, of how they are going to be expecting to be potentially increasing rate hikes or cutting rates, based on what they have been saying previously, that is of course indeed affecting what this CPI outcome is going to be. And let's just touch base on a few things on what Powell has been saying recently. If you take a look at the things that they have been saying more recently, of course, they did mention that in the first place, the tariffs itself are going to be delaying the cut of rates moving forward. So they are any sort of action they are doing with the rate cuts, rate hikes, it is going to be delayed moving forward with the tariffs. And reason behind it, because what Jerome Powell was saying on the other recent press conference, if any of you have been watching it, I can of course leave a link to the press conference if anybody's interested. But what they have been saying is they are interested in seeing what the tariffs is going to be causing as an outcome. So, of course, any decision that the Fed is going to be making with the interest rate is mostly just data driven. So they are not just basing this ideas of cutting rates and hiking rates based on random opinions. Of course, they are just looking at the data, and what they have been stating is they are first interested in looking at how the tariffs are going to be affecting the inflation rates, and based on that information, they are going to be making decisions of should they be cutting it, or should they be hiking rates further. So that being said, right now it is not expected to have any further movement in the rate cuts or rate hikes. That's also why in the past couple of interest rate datas, also the last one we had previously, it has been unchanged. And of course, the reason why it was unchanged, because they were first interested in seeing how the tariffs are going to be affecting the USD long term m most of this year. So most of this year, I mean, the upcoming months, you're not even expecting rate cuts or rate hikes. You're just further expecting it more on the tariff side. So that being said, the CPI data, it does become a bit irrelevant right now. And also, on the other hand, because CPI data is being irrelevant right now, it is not a data you would want to be considering for today, and also moving forward the next couple of days. It's rather something you would want to put to the sideline, because as the Powell and the Fed has been stating, they are not interested in changing the interest rate until they see how the tariffs are actually affecting the economy more on the long run. So that being said, considering that here CPI data is of course showing potential higher inflation with the forecast, because of course number is higher, higher inflation would mostly mean that there's a willingness to be potentially hiking the rates. So in the first place, just to clarify what the main opinion is going to be, this here is absolutely not going to be moving the USD any weaker. Why is it not going to be moving the USD any weaker? Because tariffs are already positive. It is increasing the strength of the USD. And on the second hand, they have not been changing the rates of the interest rates. So that means if no change of interest rate, the previous sentiment is followed. And thirdly, right now we see that the forecast is, of course, on the core CPI is higher than the previous one. So obviously that means higher inflation. So it's more on the potential that if they decide to be touching the interest rates in any regard, like if they decide to do anything with it, it is definitely not on the rate cut side. It's more likely to be hiking the rates because they want to better the inflation. I mean, any potential inflation, they would be battling it with hiking the rates. So, as a conclusion, we can just derive the information that there's no way. I mean, of course, the likeliness to be having weaker USD is slim to none. The likeliness to have further higher USD right now, strengthening USD, is much more likely based on this information, plus combining this information with the US-China trade deal that we, of course, mentioned also yesterday. So that being said, this range here, I mean, also if you just take a look at how the market trend has been forming, like just take a look at the market trend of how everything is progressing here. Obviously, we clearly understand that everything here is in a developing upward trend, of course. We just created the most recent push in the market higher, we just created a minor pullback. So it's much more likely to be seeing further higher push here instead of any sort of significant drop. So in that case, I will be a bit ignorant of the markets making a massive pullback down here. It seems a bit unlikely, and I would be more interested of more of trading within this range and within this range, of course, how the market is progressing, of course, to be offering further rising opportunities on the USD side. And like I mentioned, reason why this is going to be very important, firstly on the USD, of how the USD is progressing, because it is going to be helping a lot in the decision making on the on the forex pairs, because of course we perfectly understand that this is going to be connected with the forex pairs on the XXX USD side, like Euro USD, GBP USD. Those are the ones that are, of course, the most affected by the strength of the USD. So, as the main conclusion here, of course, further expecting high prices, firstly within this range, because as I mentioned, there's no actual reason to be seeing any major pullback here. Within this range, the same shall be expected, of course, on the other XXX USD pairs. Yeah, just a brief discussion here with CPI as we progress in today. And also, guys, before I cut the meeting, just a quick reminder, if any of you choose to go with Q unfunded, which of course you should be choosing to, please make sure to use my affiliate discount code LT5. You just gotta input the LT5 code here. And of course, you're gonna get that 5% off with my affiliate code. So just make sure to do that LT5. If any of you are looking to get a challenge, Q funded is of course the way to go. So guys, just to quickly wrap it up, of course, higher USD expected based on this fundamental event, and just be careful with CPI today. It's of course very high impact event. Have a good trading day, guys, and thanks for tuning in. Bye bye.